It's Good Friday. It's time to do, well, Good Friday business here on Business Incorporated. Here's what we have prepared for you on the program. The plan to boost production in Egypt with low-interest loan is on. The first phase is about to be distributed. And in Tanzania, tourism is boosting. The sector records 13% growth in revenue. Ethiopia and Kenya have signed implementation of a memorandum of understanding to facilitate trade relations. You're welcome to the program. I'm Ini John Mekwa. And we'll start updates from the story that we had in the morning. Motorists traveling out of Lagos, as well as those coming into Lagos for the Easter break, are stranded. They were stranded earlier today as a result of an early morning accident. Told you about it during business morning. It's involved multiple vehicles and unconfirmed number of casualties. Some of my colleagues on their way to work did see some of those casualties, those injured, being taken to the hospital. The incident at Kara Bridge outbound of Lagos along the Lagos-Ibadan Expressway, of course, as expected, led to significant traffic congestion stretching back to Otedola Bridge area and Alausa Secretariat. Emergency responders, including the Lagos State Emergency Management Agency, Federal Road Safety Corps, the Nigeria Police Force, the Lagos State Traffic Management Authority, as well as Ogun State Traffic Compliance and Enforcement Agency, were on ground to ensure safety of lives. And so far, we hear that the gridlock has been cleared, and some of these officials have given update on what happened.
Let me quickly say that it was an act of a lack of patience that actually caused this multiple crash, because 7 vehicles are involved. There was a little hiccup in front from an eyewitness account. So, slowing down, a truck, a container carrying truck, ran into a smaller vehicle, which eventually ran into 5 other vehicles, which means that container and 6 other vehicles are involved. But one good thing is that while 5 persons were injured, no life was lost. As at the time of rescue, nobody was dead. When the crash happened, you take danger away from the casualty, or the casualty away from the danger. So a situation where they are taking the injured victims away from where another secondary crash could happen, people might see it as if they are dead. No. As at the time we were given this report, there is no death. If there is any after, then we'll be able to say, but for now, there is not. Now, what we are doing is to ensure that we clear the road of obstruction, which we have done. Then we are contacted the LASEMA and other agencies for the for claim, so that we can lift up and take away the container. However, the road has been open to traffic.
Well, I guess we can just be happy with the news that there's no one that died from that, and we pray it remains that way. Now let's do business. Oil prices extended gains. The prospect of tighter supply after Washington imposed further sanctions to curb Iranian oil traders, and OPEC also. Some members are pledging further output cuts to compensate for pumping above agreed quotas. And just, it's slow trading globally for today. So just like it was in the morning, we see a 3.04% gain on Brent at $67.85. WTI also gained 3.17 at $64.45 a barrel. And both benchmarks settled 2% higher on Wednesday and at their highest level since April the 3rd, and on track for their first weekly rise in 3 on Thursday, and the settlement of the day of the week ahead of Good Friday and Easter holidays. And we know that all of this is connected to President Trump and the new sanctions on Iran, and of course the consequences on the global economy, which among others the World Trade Organization has warned us against. So Nigeria now, Turkey's largest oil refiner, Tupras, has placed orders for Nigerian crude oil cargoes scheduled for March and April, a move that could boost the country's revenue amid efforts to ramp up export. This is according to shipping data from global commodity tracker Kpler, which notes that although the exact volume of the Nigerian cargoes was not yet disclosed, but the deliveries are expected within a 2-month window. This development comes as Nigeria looks to increase crude oil exports to fund its 2025 budgets. Remember that Nigeria depends on crude for revenue and for foreign exchange to about 90%. Let's leave the oil space now in metals. We see that gold prices eased after a sharp rise in the previous sessions as investors book profit ahead of the long holiday. Mostly very slim trade today, if at all. That's what we have there. So we see spot gold closed down yesterday, 0.15%, $3,341.30 per ounce. U.S. gold is also down 0.2%, $3,351.50. Spot silver lost more than 1%, $32.54. Platinum is down also 0.33%, $960.90 per ounce, and palladium lost almost 2%, 1.75, to land at $962.50. And of course, the movers and drivers are not different from the tariff talks and uncertainty in the space with gold and metals are being seen as a hedge in a time of turbulence. So we see more movement around there. Meanwhile, President Trump touted big progress in tariff talks with Japan. He said that, but we do not have the details yet, even up till now. They said the first rounds of face-to-face negotiations since his barrage of duties on global exports. Now let's come to Nigeria now. Earlier today, had a conversation on the crash of the digital investment platform CBEX. The director of Institute of Capital Market Studies in Nasarawa State University, KEFI, as well as the president. He's also the president of Capital Market Academics of Nigeria, Professor Uche Uwaleke, is advising potential investors to understand some parameters involved in investment. He warns that, for instance, any investment promising more than 30% in Nigeria today should raise a red flag. He was a guest on Business Morning.
One thing the public need to understand that where you have an economy where, for example, the average return on investment is not more than 20% per annum, okay, and you now find an investment that is promising you 30% every month, 40% every month. Of course, you should that should raise your antenna. Okay, if you look at, even if you take 30% per annum, that translates to 2.5%, in a month. Okay, assuming you even have any such investment, and of course, I can't think of any, right now. So when you now have one that is saying you get 30% on a monthly basis, or more than that, that should make you cautious as a rational investor.
Well, also this morning, we did talk about what's going on in the credit system in Nigeria, the potential that it holds, and so far, the system has recorded 50 million as those captured in the data system, but the system stakeholders say has not been fully utilized. The potentials have not been fully utilized because there are some hitches that governments might need to intervene with.
Where we are today, quite a lot of these loans go to small ticket transactions. A lot of these transactions have to do with just meeting immediate, funding needs. So people want to borrow 30,000, 50,000, 100,000. These are the crop of the high number of applications that we see. But where it comes to the core consumer loans, of access to loan for mortgage, for properties, for vehicle acquisition and enhancing business, expanding and growing businesses. There's still a lot to be done there. And the reason is very simple. The average income for Nigeria is still very low. Today, if you want to buy a new vehicle, you know how much it is. Let's say you want to buy a Toyota Corolla, maybe you need about 40 or 50 million. And you have to pay this loan over 4 or 5 years. So that average monthly contribution may still be very high for a lot of people. And I think it's the same thing when it comes to mortgage loans as well. And of course, when you add the issue around interest rates, which is high on account of the environmental issues on inflation and cost of funds, you realize that there's still a lot to be done. So for me, these are the limiting factors that we are seeing. We need to be able to move this new tempo we are seeing from people just borrowing for for consumption, to be able to own assets, to be able to stimulate their small businesses, and so on and so forth. Government is trying to do some level of making special fund available with lower, package or moderated cost of fund interest rates. Maybe single-digit interest rates, for instance. So a major issue has to do with cost of funds. So where we have incentives to drive down the cost of funds, the price of loans, it will help a lot of businesses and a lot of consumers to be able to want to do that.
The global trade tension remains a source of concern for many, including the Lagos Chamber of Commerce and Industry. At its quarterly press briefing, the meeting elaborated on the impact of the change in international trade landscape and how it will affect Nigeria's imports and exports. The president, Mr. Gabriel Idahosa, asked members to rethink and re-strategize for new trading partners. It's the quarterly press briefing of the LCCI, and the most pressing global trade tension is on the mind of every member here. The executive says they've been following conversations since the United States imposed at least 10% on imports from other countries into their country, and Nigeria has a 14% tariff.
What is more important and where Nigeria is more impacted is the effect of the tariff on countries that we have very high volume of business with. And that's number one, China, our biggest foreign partner, and India. So the effect on those two countries are what will affect us. And some of the effect is positive because also, as you probably referred to and we have been seeing, China is now paying a lot more attention to other countries where there is room for growth of their exports. And one of the biggest suspects, of course, is Nigeria.
Seizing the opportunities may be hampered by infrastructural deficit. The Director General of the Chamber fears this will be accentuated by the squeeze on government revenue.
That infrastructure or capital expenditure is at risk because of the way the budget is structured. And we need to have infrastructure to support all the sectors to do well. So that's one area where we need to try and attract foreign direct investment, but also pay particular attention between collaboration between the private sector and the public sector to get infrastructure right for the economy to begin to do well.
LCCI is also asking for reduction of interest rate at a time like this to give incentives to investors in the real sector to contribute more to non-oil exports. Well, it does seem everyone is asking for cheaper funds in the country, and dealing with inflation requires an increase of interest rates. Finding a balance is the CBN's responsibility, among others, you know. But anyways, let's head to the markets now. Most of them are closed for today, but Will still has gist for us from the market.
Yes, thank you. Like you said, many of the markets are closed for Good Friday. Easter is here. A lot of celebrations, but we see some markets are still open, like in Mauritius, but most markets in Africa are
major
closed.
Markets, at least those ones that we follow.
Yes, that we track are closed. But Nigeria's NGX closed in the green yesterday. However, but for the week, However, we can.
Well, let's celebrate. Let's celebrate Thursday's close. Yes.
Close, yes. So markets are closed in major markets we track in Africa. Closed. Nigeria closed 0.37% yesterday. Still at 104,000, regaining that level, and we're hoping we stay on that level and climb further up. South Africa and GSC was down for yesterday's performance. You see 0.23% down. Let's look at EGX 30 in Egypt. It was closed Thursday for the week as usual. We see it up, however, 0.10%. For EGX, it was, they showed a varied performance on Thursday, as I mentioned, with EGX rising by that percentage points to 31,062 points. We see NSC, that's the NSC in Kenya, closing Thursday's session for the holiday as well in the red, 0.55% down. But let's get a sense of how the NGX has performed so far, especially for the month of April. We're seeing negative performances for a lot of the trading sessions. Well, bringing in Ambrose Omodion, Chief Research Officer, Invest Data Consulting, to break this down for us. Apparently, Ambrose is not yet on the line. Let's just move on now to see how other indexes performed, especially in the Middle East. We've seen markets in major markets in the green, especially for the UAE. The trading for the UAE at intraday today, we see it in positive territory, 0.03% at 9,000 for Abu Dhabi, 261 points. Dubai is up at intraday, 0.4%. Let's look at the other markets within the region. Saudi and Qatari indexes are closed, but the Tadawul, that's Saudi Arabia, the all-share index closed, in lower territory, negative territory, 0.7% at 11,552 points versus 11,634 points we saw in previous session. Qatar, as I mentioned, also in negative territory, 0.61%. Now let's go over now to the US and see how they performed. Well, for Thursday, because they're closed today for the holidays, S&P 500 rose 0.13% on Thursday, but the Dow tumbled 527 points after United Health plunged 22% on weak earnings. And the Nasdaq also dipped, with all three indexes posting a 3-day losing streak. Nvidia, as a tech giant, dropped nearly 3% after a $5.5 billion export-related charge. Meanwhile, Eli Lilly surged 14% on positive trial results, and Netflix gained 1% ahead of earnings. Now, despite a brief boost from Trump's trade deal comments, markets closed the holiday-shortened week in the red. They're not taking that bait there. The Dow and the Nasdaq fell over 2%, while the S&P 500 lost 1.5%. Let's go now to Asia markets. Let's see how they traded today. They traded mixed in thin all-day trading. Japan's Nikkei 225 gained 1.03% today, closing at 34,730 points. And this came after March inflation hit 3.6%, marking a third straight year above the Bank of Japan's 2% target. Now, core inflation rose to 2.9%, signaling persistent price pressure. South Korea's the Kospi edged up 0.53% to 2,483 points, and we see that gains in shipping stocks, that's for Japan and for South Korea, followed new U.S. fees on China-built vessels, boosting investor sentiment for that. And now, top gainers for that industry, for that sector, included Japan's Kawasaki Kisen, which was up 4.17%, and South Korea's Pan Ocean up 1.98%. Hong Kong is closed for the Easter holiday. Meanwhile, mainland China closed trading today. If we look at the mainland China's trading down 0.11%. Markets in India are also closed for Good Friday. Now let's circle back to Nigeria's NGX. Now let's look at the performance, assess what's going to happen after the holidays, and see if the NGX is going to hold up very well to investors and shareholders' expectations. Joining us now, Ambrose Omodion, Chief Research Officer, Invest Data Consulting, for this discussion. Ambrose, happy Good Friday, and thank you for joining us. We've seen the market performance so far. The NGX closed yesterday in the green, 0.37%. However, for the week, it fell 0.32%. What is your assessment of the performance of the market so far for the month of April? Looking at month to date, we see it down 3.3%. Year to date, also, well, year to date, hanging on to 1.3%. Ambrose, what would you say? How would you assess the market's performance in April?
Yeah, I would say that for the month of April, we have seen a mixed market, as markets also react to what is happening globally. But one thing is that our market is not following the trend we are seeing globally because companies on the exchange have performed impressively for 2024, and that trend is likely to continue in 2025. That is why all eyes are still on the first quarter earnings report for many quoted companies. And also for the ones that are declared dividend, we are seeing also markdown, also affecting the market trend. So the previous day after yesterday, we saw that the high caps companies, especially the first tier banks, were marked down. That also reflected the on index. The index closed lower, breaking down the 1,400,000 mark. For me, it's just that the market is still oscillating. But the good thing is that the month of April in Nigeria market is a month that investors prepare for the full half year or first quarter or first half of the year. Why I say so is that if you look at the trend before now, as from the month of January, you saw market for the past 6 years looking up because people are preparing for the dividend payment, which comes to in the first quarter of the year, which is the peak of earnings season in Nigeria. But the first quarter of any financial new year gives an investor an insight on what to expect in that current financial year. And on the exchange of Nigeria Stock Exchange, we have many companies that had the same bar as year end that investors are able to see their first quarter scorecard to see how this company is going to perform, especially if they are following the trend we saw in 2024, where we are seeing a better number compared to the previous year, and that will give the insight where we are going. And at the same time, what is happening globally, yes, we know that Nigeria is now with about 14% tariff, but we tell that this is also a plus for us. If the government and the its economic managers will sit down and look at what area can we develop to make that will become self-reliant in some areas that we import less, and at the same time we start exporting, that will be good for us. But as I said, the ongoing either call it tariff war or trade policy of the US is for many companies to be made and at the same time also to be mined. That means that it's an opportunity for companies to look inward and do better to drive their own economy. That means the monetary policy and fiscal policy have to come forward and tank together to make sure that they are pushing their economy. And that is why I'll start this way. If you look at the macroeconomic data that has come so far in our market, it's pointing to some the direction. Yes, after the rebase of the GDP and the rebase of inflation figure, we saw positive GDP have consistent. But for inflation, we saw that after two months of positive or kind of slowing down or disinflation, what we want to call it, we saw that the last one that came recently, we saw a change. And that will signal if the next MPC meeting that's coming in May, whether there'll be rate cut or not. But for me, if you are using this alone to determine your rate cut or a low lift or change again, that means we are not doing Nigeria the proper service as economic managers. Why? Because we are seeing that our exchange rate that may be stable has turned, we are seeing some volatility again this period. That also we are seeing that it's also eating into our reserve. But good thing is that according to CBN, our reserve is solid. If that is true, that means that we need to drive the home economy, which is our own economy internally, with good policy that will encourage Nigerians to do more business that will drive the economy. But on the side of high cost of funds, which you say, yes, we are managing inflation. Inflation have also been there before the rebase. Now, what the purpose of the rebase? I believe that what we should do now, already yesterday we saw that, we saw that Dangote refinery I also put down price from almost $9 to about $8.90 again. This oscillation in that fuel price also will impact our transportation with the cost of moving goods from one place to the other. But I believe that the economic managers should look inward and make policies that will drive the economy. That's why every investor in the market, looking at the month of April, which is we're going to look at like an outlook between now April or May. We should know that this is the time for investors to target where fund is flowing to. Yes, is government coming to raise more money on a high interest rate in the bond market? If that would be a kind of a disservice of equity market, or if there's also high interest rates from the monetary policy, that will be also in service to the equity market. But if we saw another we see another either remain unchanged in terms of interest rate or decline, that would be a plus for the market. Also, we see that government is not rushing also to raise funds either globally or locally in terms of hiking the yield or the rate I think to borrow from either from fixed income market or treasury bill. That also will determine where the market will go. For me, every investor or trader to look at the numbers that are coming. We have seen two numbers that came from that came from the first quarter. We saw one from Geregu, we saw one from Nigeria Brewery. The one from Geregu tell us that yes, this number is missed, but what we saw the one from Nigeria Brewery give an insight that we might see a turnaround in consumer goods because we are seeing that their loss or that was caused by exchange rate is definitely becoming a bit stable. We might see positive number from that industry. For me, all eyes should be on first quarter to give us insight where the market will go in this April and the rest of Q2.
Okay, you just mentioned some of the macroeconomic factors that have influenced investors' decisions buy or sell. But we've seen the all-share index. Well, we've seen the month-to-date negative territory. Is this historically correct for the month of April? And if not, what do we expect for stocks? We talked about Nigerian breweries, which has turned around. For the first time, they're posting a positive in the first quarter of the year against what they posted in 2023. What do you expect for these stocks? Which stocks, in your opinion, should investors be looking at to be hedging against many of what we're going, because we're going to be having the rebasing coming soon, and we're going to be seeing that reflection maybe in the numbers. Are investors still going to be looking at stocks in consumer goods, especially with food inflation, maybe not tapering as much as we think it is right now?
Yeah, like we just said, food inflation was a bit better compared to other indices after releasing the figure. But I'll still tell you that we are seeing stability in the FS market before now. That has supported what we are seeing in the result of Nigeria Brewing. If that continues, that means most of those companies in that sector are going to see a better Q1. And don't forget that, if you look at their fourth quarter 2024, despite most of them posted a negative number, but their fourth quarter for that 3 months was also positive. That means it's a trend that, yes, we are seeing a turnaround in the consumer goods. That means this is the time for investors that are designing or traders to start positioning in that kind of industry now, because we see that if there is stability going forward in our FS, but what is happening globally, if after 90 days there's no solution, that will also trigger. But if they're able to come to a round table and the about 75 or 80 countries that have come to that negotiation table will able to arrive, that will be a plus for us. That yes. And also, like I just said earlier, that if our fuel prices, that this is the major thing that cause inflation, because services also need to move your one place to other, and also goods from one place to other. That means if we can see stable also related in fuel price, we start seeing them either around 800 naira or lower. That would be better. We are seeing from goods about 900 and something back to 890. Good one. But if that continue in the south direction, that's a plus for inflation figure, also for the economy. But I believe that for investors, this Q1 number is what will determine where the market goes. I believe that this is the right time for investors to buy into value, because markets are pulled back from as high as 109,855 to almost below 104. Now back to that. That means markets are giving us enough room to buy into value because prices have pulled back and yields of many companies are up because of what prices have gone down, and we are seeing better dividend and earnings in the market.
Okay, so for Nigerian breweries, the turnaround we're seeing, is FX no longer a challenge for the company?
We've seen it's still there, but we have seen a lot of drop in that FS issue. That means in the second quarter, if continues, that means stability has come. But they will still, compared to what we saw in 2024 first quarter and this 2025, the FS loss has dropped, so that would be a plus for the company.
Okay, so what is your outlook for the next week? Does this send a signal as to how the rest of the quarter is going to end, especially now we are still in negative territory? Month to date, year to date is just 1.3%. How do you see the markets, the all-share index, ending this quarter?
No, for the month of April in the history of Nigeria market is up and down, as a trend. Why? It depends on market sentiment and also macroeconomy within that month. Why I say so that in the month of March, when companies are declaring, it is April, you see a lot of companies, paying, their dividend, doing their markdown, and that also affects the month of April. But it depends how number of company that will pay in this May. If they are paying this April and people are also reinvesting that one, that will support the market to go. But look, I said because of the Q1, if Q1 come positively, most of the institutional investors that are sitting on the fence are coming back to the market to position for the year, knowing that in the next 90 days, that was started ready to see the outcome of what the negotiation table they are coming around in global markets as regard the tariff. If also come out positively, our markets also kind of not following that trend, exactly that is going on. That means because of companies on the exchange have done well before now, and Q1 coming to beat expectation as well, what eyes are seen on Q1, that also tell all the market. For me, I believe that the next week market one should be a market that will start looking up. But for the month of the April, toward the end of the month, that last week of the month of April, because of the positive number that is likely to come, let me just likely because we have not seen the number, but I believe that nothing has changed in terms of macroeconomic data. We're going to see a better number compared to what we saw in 2024. I will tell you that for free for now. But I believe that when market reacts to those numbers toward the end of the month of April, this negative territory we're seeing the month might likely turn up to no. I tell you that if market gain for 2 or 4 days in the last decreasing of month of April, we're going to see a turnaround. But I tell you that this month presents a lot of opportunity for investors to buy into value. I will tell you that for free. Yeah.
Thank you so much, Ambrose Omodion, Chief Research Officer, Invest Data Consulting, for your perspective on Business Incorporated.
Thank you for having me.
So, this is a good time to buy into the market. This is a good time because it's like he said, April is the month where we have the ups and downs, seesaw movement. So it's normal for us to see the index month to date in negative territory. It's no surprise there. Year to date is still not as great as we would want it, but it's still in positive territory anyways. But the market is doing well. Nigerian breweries turned around. So FX issues, a bit of stability in the market now has made we see that turnaround for Nigerian breweries, and hoping that the next quarter and future quarters they will not report losses, especially for shareholders.
We hope so, Will. But you know that talking about the results, this is what happened last year. So at the beginning of this year, we had seen a bit of stability, but
FX is climbing up again.
Exactly. So we just hope, and the CBN has been aggressively intervening, which is why it's affecting our reserve and all of that. So we do hope. We've seen the naira drop now to 1,006. I think there was a bit of appreciation yesterday to close for the holiday and all of that. So I mean, we'll just keep our eyes there.
Definitely.
But I think there's also something that stands out. When we look at our inflation number, the last one, we see it's core inflation that drove inflation to the negative territory. Perhaps it is because of the rebasing. So the rebase has reduced the value of food.
Food is no longer
in the basket.
Major.
Exactly. So that's why we see issues around electricity, FX as major drivers now, which is what is captured in the core inflation. But I mean, we're here.
We're just hoping that the numbers do us good, especially if the government, like you said, we're looking at what the CBN will come out in their meeting in May, and hopefully we'll get the right, because if we can't continue with high cost of borrowing, the environment is not really
but you know
that.
that according to Mr. Cardoso, the priority of the MPC or the CBN is to drive down inflation. So we can expect that hawkish stance until inflation starts dropping.
Okay.
All right, Will, thank you so much. Let's take a break now. When we come back, we'll head to Berlin. Markets are closed there, but we still have a good conversation waiting for you. Join us again. Welcome back to Watching Business Incorporated here on Channels Television. Well, over in Berlin, markets are closed, and there's no business across large parts of Germany and Europe and all the parts of the world, including, of course, Europe and Germany. The high holiday of Good Friday marks the beginning of Easter, but it's also the beginning of travel season. That's what Lars joins us to tell us. Hi, Lars. Good afternoon. And what can you tell us about the travel trends this year?
Thanks for having me. I guess the most surprising thing I can tell you is that most people in the travel industry are expecting a strong year. Now, I find that surprising because we've heard over and over again that people currently are worried that business isn't doing well. Here in Germany, we're in a recession with 2 years definitely seeing a shrinking economy, and this year being forecast as another weak year. So you would think that people are trying to save some money and maybe forego trips, but you'd be wrong. It turns out that people are still traveling, with some business insiders even saying that travel is one of the last things that people tend to cut back on. So whether it's hotels and restaurants in traditional tourism hotspots, whether it's trip organizers, travel agents, or even travel book publishers, I found a surprising amount of optimism in the sector.
Well, I have to tell you, Lass, I'm also surprised, but where are they traveling to?
There's really no big surprises here. Now, I've been looking at German tourism and saw some numbers for other EU countries too, and it seems most of the destinations are the same old classics. Top of the list are London, Vienna, Paris, Rome, and Berlin when it comes to city travel, with people seeking out cultural spots and going for regular sightseeing. Then, of course, there are the traditional beach vacations, and that is mostly the Spanish island of Mallorca. There are Crete and Sardinia. Generally, looking at mainlands, it's Italy, Spain, Greece, and Portugal. There's one outlier. Japan is on the rise as a tourist destination. That is strange because it's obviously far away, and that makes for an expensive trip. But there's apparently a shift happening where more and more people are eager to explore parts of the world that have a different culture. Then maybe one trend that has a bit to do with money constraints. There seem to be more people going camping or booking outdoor adventures. Then again, depending on the trip and even the gear, this might not be much cheaper than more traditional getaways.
Yeah, so I wonder if the tariff issue is playing into people's travel plans.
Yes, they do. The United States in particular has been a favorite destination for Europeans for decades, and that is definitely dropping. Travel agents have reported fewer bookings. Some airlines have actually cut back on their flights to the U.S., and that's obviously due to the fact that the U.S. under Donald Trump is just not what people want to deal with. The country is currently extremely unpopular, but there's even a bit of an economic background to it. I've heard people saying that they're just not willing to support the U.S. with their tourist dollars. Maybe that's a reaction to Trump starting a global trade war. Maybe it's about his disregard for many values that people hold dear. Also, there have been arrests of travelers even from, let's say, not suspicious countries at the U.S. border. So far, at least 3 German tourists have been turned back. Some had to spend some time in jail before being flown back home. Stories like this obviously are a pretty strong deterrent for people booking a vacation.
Yeah, well, it does sound like people are not ready for the stress, Lass. Thank you so much. All right, now let's come to Africa, beginning with Nigeria. Vice President Kashim Shettima has inaugurated the Interministerial Committee on Research and Innovation with the objective of reducing Nigeria's food import bills by 50% to ensure food and energy security in the country. He inaugurated the committee at the conference room of his office at the State House in Abuja, during which he charged members to work towards the realization of the vision of President Bola Tinubu's administration to build Nigeria into a $1 trillion economy within 10 years. The Vice President said the committee is a prelude to an annual presidential plenary on innovation approved by the President.
This committee will coordinate action, as I said, in 5 strategic sectors: agriculture and climate resilience, manufacturing excellence, while we break our dependency on imports and build proudly Nigerian supply chains; healthcare innovation, while we shift from importing medicines to exporting medical breakthroughs; natural resource optimization, while we stop selling raw materials and start exporting ingenuity; and energy security, while we power economy and secure our future. What will it take to reduce our food import bill by 50%? How do we triple local pharmaceutical production? Let us align policy, research, and investment to answer these questions and achieve measurable, meaningful outcomes. Let me also emphasize this. Innovation is not just about gadgets and laboratories. It is about problem solving. It is about purpose. It is about using science and technology to tackle the grand challenges of our time, from hunger to unemployment, from disease to inequality. Nigeria must lead this continent's transition from a resource-based to a knowledge-driven economy. The absence of a national research and innovation fund has limited our ability to back breakthrough ideas with breakthrough financing. We will correct that. We will back Nigerian ingenuity with Nigerian capital.
The managing director of the Niger Delta Power Holding Company Limited, Engineer Jennifer Abdul-Hiji, says that the company has expanded over 500 billion naira in upgrading and improving power assets across the country since its inception. Addressing newsmen at Alafia Transmission Substation in Nasarawa State, she reveals that the country was more deficient in its transmission and distribution capacity, which is why the company is spending huge resources in improving transmission and distribution capacity.
The Lafia Transmission Substation is a 330 kVA transmission line recently upgraded to a world-class standard. The managing director of the Niger Delta Power Holding Company Limited explains that despite the liquidity crisis, the company has managed to make important interventions, especially in the transmission and distribution value chain.
In spite of the liquidity crisis that we are facing, we're here to reaffirm our commitment to Mr. President's Renewed Hope agenda, which aims to scale power generation, transmission, and distributed access to electricity. So let me put it to Nigerians that for those that have been saying that the NDPHC were unable to generate optimally, the real issues are that we actually have a generation in excess of the transmission availability.
The executive director in charge of transmission at the NDPHC disclosed that this transmission line will also feed the national grid and help to improve power across the country.
One of our critical projects that is emanating from here is the Calabar Makodi to this place, which is a turned-in, turn-out arrangement that makes the system more rugged and more flexible in dispatching of electricity to our customers. So it's our mandate, and it's the mandate of Mr. President towards ensuring that this project are delivered under the leadership of our chairman, who is the vice president.
Have your seat, please. Thank you. After leaving the transmission substation, the NDPHC team paid a courtesy call on the governor of Nasarawa State.
I want to welcome you to Nasarawa State.
The governor reiterates his commitment to industrialization through energy sufficiency.
We're talking about generation. How about transmission and distribution? You know, today you said that we are generating more than we can transmit, which is exactly the issue. In Lafia is even worse. We're actually probably transmitting less than we can distribute. You know, so you need all those partners.
The 330 kVA Lafia transmission substation has the capacity to deploy about 96 megawatts of power, but currently it's deploying less than 50% of that, which is why stakeholders have called on the Abuja Disco to come and evacuate more power to serve its teeming customers. From the Lafia transmission substation in Nasarawa State, Dele Omoyeni for Channels Television News.
From Nigeria, let's head to Egypt, where that country has rolled out the first phase of a $30 billion Egyptian pound. That's about $587.7 million initiative that's aimed at supporting industrial growth by financing the purchase of new machinery and production lines. Prime Minister Mustafa Abdul Bali announced this, saying that the initiative will offer subsidized loans at reduced interest rate of 15%, with a 2% annual decline to bolster manufacturing in 7 strategic sectors, which include pharmaceuticals, engineering, food processing, textiles and ready-made garments, chemicals, mining and building materials. The Prime Minister said the program is part of broader government effort to deepen local manufacturing and reduce dependency on imports. The plan prioritizes increasing the local content in production with a focus on enhancing competitiveness and export capacity. Egypt has secured a record $4.2 billion in concessional development financing for the private sector. That happened in 2024, and that's the highest in 5 years. The Ministry of Planning, Economic Development and International Cooperation said that the total volume of concessional financing reached $9.6 billion during the year, including a $3.2 billion for public sector, of which $1.8 billion went toward direct budget support and $300 million in development grants. The ministry says that highlights shows a shift in financing dynamics, with private sector funding surpassing public sector funding for the first time as Egypt ramps up support for local enterprises and economic diversification. Tanzania's tourism sector has demonstrated remarkable resilience and growth, recording a record 13% increase in revenue to $3.9 billion in the year ending February 2025. This milestone underscores the country's sustained efforts to revitalize its tourism industry following global disruptions and reaffirming its position as one of Africa's premier travel destinations. According to official figures, the rise in earnings is largely attributed to a steady increase in international arrivals, enhanced marketing strategies, and significant investment in infrastructure. Key attractions such as Mount Kilimanjaro, the Serengeti National Park, Ngorongoro Crater, and the pristine beaches of Zanzibar continue to captivate global travelers, offering world-class wildlife experiences and natural beauty. Still in Tanzania, they will impose trade barriers on agricultural imports from South Africa and Malawi if the two countries don't lift restrictions on shipments from East African nation. Agriculture Minister Hussein Bashi has said that Pretoria and Lilongwe to remove non-tariff barriers on Tanzanian produce or to restrict all farming imports from the countries. South Africa is curbing banana imports from Tanzania, while Malawi blocks flour, rice, ginger, banana, and corn. Farm goods from the two nations wouldn't be allowed to transit through Tanzania or its ports. Additionally, the country is set to block shipments of fertilizer to Malawi. Ethiopia and Kenya have signed an implementation memorandum of understanding in a manner that would facilitate trade relations between the two countries and allow people living in the border area to access basic daily commodities without any supply disruptions. The agreement aims to strengthen bilateral trade relations and ensure the continuous flow of essential goods for communities residing along their shared borders. Let's head to the crypto space now and see what's happening right there this afternoon. It's a market that never sleeps. So what happens at a time like this? That's what we'll be discussing with Olumide Adesina. Hi, Olumide. Good afternoon and welcome to the program. Happy holidays to you. Hello, Olumide. Can you hear me?
Yes. Hello. Good afternoon.
Yeah, so how's the market looking this holidays? I mean, I know crypto market doesn't take holidays.
It's been very muted. It's a public holiday, and you know that the United States plays significant role in the national market, so liquidity has been a bit down, but we're seeing the fact that the fundamentals in the crypto market seems to be weakening because of the Trump tariffs and the geopolitical uncertainty. Despite the pause, you know, Bitcoin has been unable to hold the 85,000 support level. Ethereum's dominance levels at a record low, about 7% of the market. This was an asset class that was higher, about 15% at some point. So I think it's really highlighted the fact that risk appetite is weak. Year-to-date return, well, many of these altcoins are pretty much negative, and the dynamics in the space highlights the fact that a lot of players are betting for more drawdowns. Data from Daribit shows that a lot of investors are betting Ethereum might drop below the 1,300 mark, or at worst, the 1,000 mark, while Bitcoin might oscillate between the 5,000 to 80,000 mark as we speak.
Yeah, so I wonder what's going through the mind of a lot of players in the community now. As you said, the market is muted at this time. But, you know, people still have to make money. A lot of people who depend on crypto. What exactly are they doing at this time in this muted market?
I think for those that are really looking at the market to make a buck out of it, I think they have to look at the long-term perspective. Yes, we have a pro-crypto president in the United States and in Nigeria, but the reality is that the tariffs and the call of the global recession definitely will impact the crypto market negatively. And you also need to look at the parabolics in other spaces, particularly the equity market, the US Treasury market. So the crypto market is more fragile to economic shocks and this sort of contagion. So the bookmakers are looking at the fact that it's really unlikely for us to see Bitcoin at the six-figure until the China-US drama is settled.
When that will be, because it doesn't look like both leaders are ready to compromise. They're just looking for strategies to survive without each other. But the coming days will reveal a whole lot more. Olumide, thank you so much for your time and enjoy the rest of your holiday.
Yeah, thank you for having me. Yeah.
All right, so just before we go, let's see the numbers. There you have it. Bitcoin is still in the red, but it's still around 84,680.11. Ethereum has dropped from 1,006 that we had yesterday. It's now at 1,500 level. Lost about 0.5% right there. XRP is in the red and a whole lot more right there. We'll see what the holidays look, but as Olumide noted, it's a muted trading period. Because it's holiday. So while the market doesn't sleep, a lot of investors just want to have a little bit of peace. So we don't have so much activity right there. But we'll see what happens if President Trump will not move the market one way or the other in this long holiday. That's it on the program. Thank you so much for being a part of Business Incorporated and Business Morning all through the week. It's been a pleasure, you know, being on this side, and so glad to always have you there. So while we take a rest for the weekend, we prepare for next week again. Even though it starts with a holiday, I'll be here and be there for me also. Enjoy yourselves.